Nick Colas is the chief market strategist at Convergex. He joins us tonight from the NASDAQ. So, Nick, we began the show with another dire warning about the fiscal cliff and the threat of recession. Now we just heard that substantial progress has been made with the European debt situation. Are Europe's troubles deeper than the U.S. here as we sit in the latter half of 2012?
Well, I would say that the Euro problem are deeper in many ways. Unemployment in places like Greece is reaching north of 25%, north of 58% for young people. So there are pockets of Europe that are clearly much worse than the general U.S. economy. But I'd say that the U.S. is quickly catching up. The issues with the fiscal cliff are serious and they're fairly immediate.
Are they making substantial progress in your estimation toward avoiding that cliff, like we just heard from the European Central Bank president and his explanation of what they think they've done the last year?
I think Europe has certainly made some real progress, particularly in the last few months, in putting a firewall in place that doesn't allow the problems in Spain and Spanish debt, for example, to infect other markets such as France or even Germany. But at the same time, you've got to look at the general economic picture there, which is still quite soft. And just yesterday, President Draghi was talking about the effect the Eurozone crisis has had on Germany and slowing the German economy. So while they're certainly better off than they were, they're still not really on the right path to better growth.
So here in the U.S., post-election day, 2 days of significant selling pressure with the drumbeat of the fiscal cliff getting louder. But also, you mentioned the cracks continuing to be exposed in Europe. What do you think is really driving the selling that we're seeing here in the U.S.?
Yeah, it's a great question. I think you can chalk up yesterday's response to the election, a bit of a surprise, although it really shouldn't have been. What we're seeing now is the beginning of the realization that the negotiation around the fiscal cliff is not going to be simple or immediate. It's going to take some time, probably go to the 23rd hour at the end of this year, and will only be a stopgap measure to take us into 2013, and we'll have to negotiate large chunks of the cliff with the new Congress in 2013. So it'll be a problem that stays with us for some months. It won't be answered in the next week or two.
And what about today's sell-off? And do you anticipate this kind of pressure to continue with the drumbeat of the fiscal cliff and the European situation continuing?
Well, it's important to keep a really balanced perspective here. Certainly the fiscal cliff is an issue, as are many other macro concerns. Unemployment, low consumer confidence coming into the holidays. There's a lot to be worried about, but let's also remember that U.S. companies have done a fantastic job improving their earnings profile, and the S&P is going to earn something on the order of $80 to $90 a share in the next year. And while that leaves the market fairly fully valued, it's not overvalued. So I wouldn't anticipate we get a big pullback from here, but certainly macro concerns are an issue.
And they certainly will be in the forefront for a lot of investors, big and small. At the NASDAQ tonight, helping wade through all of this information, it's Nick Colas along with us from Convergex.